MCX IPF presents Commodities Trade.
Rising inflationary trends should be conducive for buying in gold, implying that the investment demand for the yellow metal will likely increase in coming months. Gold has performed well in times of uncertainty. This is the chart for gold for past 20 years, where gold has done well in times of economic crisis. In 2008, the gold prices gained from a low of 692 to almost 1100. And then came 2011, where we saw the prices run up again at 1892. The period between 2012 to 2016 was weak due to strength in equities and US dollar, and then 2020 saw all-time highs at 2078 yet again. The gold prices have given good returns in recent years. Experts calculate that gold has beaten inflation when you look at the last 10 years horizon or even 50 years for that matter. The current year is trading in the negative, and that's because of the strength in dollar, high treasury yields, and also the investment money that poured into equities and industrial commodities. But with inflation concerns that seem changing, gold seems to be getting its mojo back and is holding above $1,800 per ounce, and banks are of the view that 2,000 is a possibility back yet again by third quarter of this year. India is facing its second wave of COVID, and a severe one. Almost 90% states are under lockdown of sorts. Retail jewelry stores are closed and no delivery is allowed. People dealing with health issues of near ones are not looking at jewelry shopping, though investments are being done. Even on Akshaya Tritiya, no active promotional activities are announced by jewelers. Gold in India, in any case, is over-owned in form of physical jewelry, with nearly 65% of gold consumed in form of jewelry. And gold is under-owned as financial asset, but that seems to be changing as series of lockdown restrictions have led to investors buying gold online. 2020 saw record purchases in gold ETF and gold bonds in India. So if you are planning to buy gold, these are the ways to do it. Gold ETF is the first thing which can be bought electronic form. Most of these instruments track domestic physical gold prices. For gold ETF, it's listed on NSE, BSE in cash segment, and you can trade via demat account and a broker. It is bought and sold at the same price pan-India. Gold bonds are then issued by Reserve Bank on behalf of Government of India and are substitute for holding physical golds, and persons resident in India can invest. The bonds also bear interest rates of 2.5% per annum, credited semi-annually. The third is digital gold. This can be bought via various apps launched by brokers, jewelry houses, and e-tailers. And then you have futures and options and indexes, which are leveraged products, a market which is open from 9 a.m. to 11:30 p.m. So you can choose your window for trade, pay a minimal margin for trade, invest, or even take delivery.
MCX IPF presents Commodities Trade.
Brought to you by MCX IPF.